Coastal Financial isn't your ordinary bank, nor is Eric Sprink your ordinary CEO, which is why we're cranking up the banking talk to a 10 on this new episode of Plugged In. So Eric, it's good to see you.
Thank you, Alan. You're most generous in your introduction. I don't know if being different's so good some days.
Oh, you don't want to be the same. That's boring. And Eric decided a few years ago to buy the ticket and take the ride, to borrow from Hunter S. Thompson, and got into the banking as a service space before a lot of folks did. So you might be familiar with Coastal, you might be familiar with Eric, but the BaaS business model is one that's being tried by some 90 or so financial organizations at the moment. I find them all very interesting to watch, but Coastal is one that I've long admired. So I'm just delighted to have Eric here to share his perspectives on what's really moving and grooving in the world of banking today. But I have a tough question to start you off with. Are you prepared for this?
I'm prepared.
All right. How much MTV did you watch when you were younger?
Not a lot. I enjoy music, but I was always an outside kid, so not very much.
Oh, gosh, this might get off the rails fast because we named Plugged In as a kind of play off of the old Unplugged setup that MTV had. So I was going to tell you 5 different songs that I was going to reference in our conversation today. I'm not going to tell you the artist. I might pick your brain on those. But there's things like Don't You Forget About Me, Learning to Fly, More Than a Feeling, That's All, and Take the Money and Run. So when we talk about getting plugged in together, we're going to use that as our musical inspiration for the conversation.
I love it. I am an 80s music fan. That's still my number one go-to today.
Well, that's perfect. So we're going to have a good time as Simple Minds kicks us off, because Don't You Forget About Me is one of those catchy titles, much like you tried to coin at our Acquire Be Acquired conference last year. I was on stage with you and our good friend, our shared friend, Ira Robbins from Valley, and we were talking about diversification and differentiation and how it's both really hard to do as a bank, but also so important to model as a leader. So you coined or tried to coin the phrase evolve or be acquired. And in the last 10 months, it's just become even more prevalent to think about how am I evolving? How am I iterating off of what I do so I stay relevant, I stay competitive, I'm able to do things in an industry that's still marked by making loans, taking deposits, and competing on price. We debated this concept on stage. I'd like you to bring it forward and talk a little bit about that evolve or die spirit of yours.
Well, I appreciate it. And you're right. It was a play on words from acquire or be acquired. And we kind of moved that to evolve or be acquired because the acquisition market is tough. And, you have to be one of the top acquirers to get Fed approval and to go through all of the regulatory constraints today. So, yeah, we kind of were picking at, and Ira's a prime example of this and one of the leaders in the country, but it's, hey, what I do in BaaS is not necessarily required or sought after by most banks, but evolution is. And I'm not talking about revolution, but evolution. And, the last 2 to 3 years has really cemented the theory that customer behavior is changing and banks may or may not be evolving to meet customer and small business customers' expectations. And we look at it and say, fintechs are this, or fintechs are doing this. And, my greatest fear to our BaaS model is that the collective banking organizations wake up and evolve to where fintechs aren't needed. But right now, fintechs are evolving quicker than banks are, and they're taking some market share.
What Eric is talking about reflects a concept that the largest disruptive force to banks today is the mindset of the leader. And so you've got your cultural DNA, you've got your cultural identity. It's hard to steer a ship. You're not going to have on a large cruise line a quick, move to the left or to the right. An organization like Eric's has a little bit more flexibility and agility given its size, but also its leadership mindset. So when you're talking about evolving, how do you keep the leadership team on its toes so you don't get complacent and you don't invite mediocrity to accidentally creep into a really great organization?
Well, yeah. And I think it starts with the board of directors at our bank. Our board is absolutely committed to looking through the windshield, not the rearview mirror. and they are continually looking out. And we work real hard to enable them to think 5, 10, 15 years in the future and get them out of their board reports that tell them how we did last year and last month. And really leaning into our board to keep challenging management to be thinking about and adopting and evolving. And then that translates to the staff, the leadership team at the bank. We're very fortunate, and it took 7 years to get us here, to be all frank and transparent. There was known resistance and there was unknown resistance to evolution. And the known resistance is easy to deal with because they're overt. They care, but they're concerned. And this is staff members, this is executives, and maybe even some board members. It's really the unknown. It's the inertia. It's the fear that is embedded in a conservative, highly regulated industry that will always bring the rubber band back to its original format. And the leadership and the board is the ones constantly stretching that. And, I'd love to say, and I believe this, at about the 4th or 5th year, the leadership team and the employees of the organization not only fully bought off on evolving and change, but they started leading it and pushing management and the board for further change. And they started seeing the benefits and they started to see the vision. And then, they started coming up with their own ideas. And then at that point, you could tell the ownership of change had changed. And it was refreshing because that allowed me to do different things. But as your normal bank out there, right, this is going to be tough. And it's going to be a couple years of continuing to stretch the rubber band and motivate and excite and also hold accountable to that change philosophy.
Sure. You obviously have a great group of people who are willing to take risks, who are looking at partnerships differently than most traditional banks have in the past, at least. I'm curious, you mentioned consolidation, how it's hard to do a deal. I think most people associate that quickly with bank-on-bank acquisitions and activity, but I'm curious about potential consolidation for those players in the middle of the BaaS space right now, the bonds, the Syncteras, the units, the Nimbuses, Treasury Prime, Move. I mean, those are 6 examples of really strong companies that are doing some meaningful work, but are they going to be around in a few years? Is there going to be consolidation in their ranks as well? How do you see the support type companies continuing to evolve?
I think that's an intuitive question. I'm a big fan of all 6 of those companies, plus there's more, right, that you and I both know of.
I just cherry picked off the top of my head 6 that I think people will be familiar with.
Yeah, and they're all great. I think the evolution of what we do, the banking as a service in particular, I believe that investment will continue, and there will be winners, and there'll be some that don't quite meet the expectations of their investors, and it will evolve itself. And I think we're in the early innings of how banks partner with other companies, whether that's fintechs or whether that's brands. We all know an example of T-Mobile that's partnering with BMTX very successfully. T-Mobile is a brand. We all know, our partnership with one of the largest retailers in the country. We know Amazon is working with Goldman Sachs. That's a banking as a service relationship. So I think as more and more banks, you said 90 or 100, I believe you, and I believe it's growing as well. There may be better ways to do what we do. And the innovation in the venture capital world is pushing some of those boundaries to see if there are more efficient, streamlined, better regulatory processes. And I think that testing will go on for a couple more years. And that's really exciting. We should all step back and be like, this is amazing that so much capital is coming into the banking space. Historically, we don't get a lot of the innovative evolutionary capital from venture capital, right? We're stuck in the PE world, which is great, but they want solid, stable, reoccurring earnings at a discount. The venture capital world is taking bets on our industry and really trying to motivate it to solve problems 3, 5, 10 years from now. And I could be more excited with those middleware companies, even though some of them may not ultimately be the winners that however that's deemed, but there's going to be a bunch of them that are.
Yeah, totally. what you're talking about, as I mentioned, we've got some music. You just naturally bring it into Tom Petty because we're all learning. We're all learning to fly. And I could nerd out on all the fintech stuff that you're discussing, but I want to introduce you to a debate that I've been having with the chief research officer here at Cornerstone. That's Ron Shevlin. Ron and I have been talking about the pros and cons of an embedded finance versus an embedded fintech strategy. Where you basically have to pick one or the other. How do you kind of reconcile the pros and cons of those two different opportunities that are in front of bankers right now?
Yeah, so obviously we've had these theoretical debates about what those words mean and the application of those words. I will tell you, if you're truly an innovative culture or an entrepreneurial spirit, in our case, I give the board full credit for being an entrepreneurial board, which transcends down to the executive staff. I don't believe you have to choose. I think a lot of the definitions are still in flux. I will tell you that each bank is different. Each bank has different risk tolerances. Each bank has different regulators. And I think over time, each bank CEO and leadership team will kind of define how they're going to evolve. And, it's that old adage of we label something and then we put everything into it. And I'm not saying Ron's wrong. I love Ron. I think he's brilliant. And I read his articles all the time and bring them back to the staff to debate them ourselves. But what I will tell you is I go out and meet with our peers. Man, I love our bank CEO group because one, they tend to be very focused on the consumer or business owner, and they deliver community banking. And that's a spirit, not necessarily defined geographically. And then they're always trying to solve for how do I continue to deliver this? And whether that's putting their own products into a partner or whether they are going to borrow somebody else's products and deliver those to a different community. In coastal situation, we actually kind of do a little of both. And so that's why I'm a little sensitive to, putting it into one box or the other. We maintain that flexibility to say, hey, this partner is kind of expecting X from us. And it's really about their customer and who's our customer. How do we solve those issues? And can we help in this way or can we help in this way? And we really lean into our flexibility to differentiate us. And so, I don't know, that didn't really answer your question, but it is a truth.
Well, that's why you and I get along so well, because what you said is how I try to articulate to somebody like Ron, the answer, it depends, is an okay answer. It's like the old Yogi Berra quote, I came to a fork in the road and I took it.
Yes.
So you mentioned the BaaS space that you're in. I'm curious about the journey, so to speak, that Coastal's been on. I took note that CCBX, which is how do we describe that to the listeners? You've got Coastal and CCBX.
Well, we have CCB, which is our traditional community bank, $2 billion commercial lending, real estate focused bank in the geography. And then we have CCBX, which is our branded banking as a service division.
So the CCBX division has, I believe, 19 fintech partnerships on it at the moment. So it looks like the company has a pretty tight focus on its partners. I'm fairly confident you've got a strong pipeline should you want to build off of this, but the revenue trends remain strong. Your outlook remains bright. Talk about how you get here. How did you get here? Where do you think you could be going?
Well, to compress a 7-year journey, first and foremost, we should acknowledge the patriarchs in this community. You said, we were an earlier adopter. With that said, listen, we're coming into the banking as a service on the backs of the great ones. I think of the Bancorp, Green Dot, Pathward, who's the old Meta, right? Brand Change. You got Cross River, et cetera. And we got to learn a lot from them, and we feel an obligation to help those that have come in after us because we're all community bankers and we're all trying to figure our way in this environment that it seems like it gets tougher every year, not only just banking as a service, but community banking. It was a lot of fits and starts, a lot of attorneys, a lot of regulatory conversations, and it was slow and steady. So you jump to the end and you say, God, you've got 19 live. 29 total that you have some type of agreement with in launching, or LOI, and friends and family, et cetera. And what you're failing to mention too is that we're unwinding some this year. Not necessarily mistakes, I would say, but just generically, either their business plan didn't work out, or we were unwilling to continue with product matches for the fintech of what they needed. And long story short, we're probably going to exit 5-6 relationships for different reasons this year. And as we look at next year and the future and what we've learned, that's just natural evolution for ourselves to say we started one way, and as all good evolutionary companies do, they pivot, right? And say, okay, we learned, we've improved X, Y, or Z. Let's reevaluate. And our board is constantly asking us, no harm, no foul. Do you feel our path is still going the right direction? Do you want to alter path, and why, Eric? And tell us. And to answer really quickly, and probably the most important thing in this regulatory environment is just stress that banks should be talking to their partners in the regulatory agencies a lot. And we've been really, really fortunate to have the FRB and the state of Washington DFI, and we're fortunate because they committed resources to us. We've been on 90-day exams for 5.5 years now. And most banks would cringe at that. And my response is, I'm asking them to do monthly now. I'm asking them to do weekly. Because as more and more things go on in society, and regulatory bodies become aware of new risk or new processes that they're concerned about, I'm telling you, the only thing, no matter what relationship you're in with your spouse, your family, or your employees, it boils down to good communication and transparency and trust. And we're so fortunate that those resources have been committed to us over time that I can't get ahead of the regulators, and we're talking all the time. And as turbulence comes up, I'm just thinking of the crypto winter today. And one of the products we have avoided is any type of crypto exposure. Not that it's bad or whatever, but just our risk tolerance. Man, it's been great talking to them and learning from them, because right now I believe they're reacting to what's going on, rightfully so. If you saw the House testimony and you see what's some of the stuff that's going on right now with the Senate, man, they're focused on this topic and the fingers are being pointed. And I'm leaning heavily into, hey guys, my regulators, you know us, you've been talking to us, you kind of know everything we're doing before anybody else does, even my board in some cases. It's times like this that you love that transparency and relationship with the Fed. So again, I stress that because times are not going to get easier. I think the next year is going to be tumultuous, because whether it's a recession or whether it's regulatory new guidance, or whatever it may be, is double down on your relationships and communicate even more. But that's my 2 cents out there.
Well, I'm going to send this pod over to your wife so she hears that you respect the sense of transparency, honesty, great communication. All good spouses should understand that's the bedrock for a happy day, life, and year. So,
well, I will tell you this. Absolutely, I have many bosses in my life, whether that be the board or whether that be the regulators or whether that be my wife. I've learned to just say, yes, ma'am, and how can I, what did I do wrong now?
Eric, we know there's one boss, and it goes from, I won't use her name, but we know who she is.
Yes, you do, and I'll use her name. Stephanie's the love of my life, and she is the one.
Well, with Stephanie, this podcast is for you. So, you're talking about having a great relationship with regulators, seeing the world moving on the blockchain front. We won't go down this path, but there's some really fascinating things going on with data solutions, on-chain identity, integration, digital asset custody that I think banks like yours are going to continue to lean into and try to figure out. It brings to mind a song that keeps going on my Pandora playlist, which is on my Genesis playlist on repeat for some great reason. But it says, just as I thought it was going all right, I find I'm wrong when I thought I was right. It's always the same. It's just a shame. That's all. And so that's, by Genesis. I just want to make sure that my memory of our past conversations about wanting to be a data provider are still your aspirations going forward. Because in the history of banking, we make loans, we take deposits, we compete on price. but we have incredible understanding of our customers' behavior and patterns and things that could actually help us to create some diversification and differentiation. You have talked to me in the past about that whole concept of data being fundamental to your overall business strategy. Where does that line up with your thinking at the moment?
Yeah, so I mean, you also talked about some different versions of data authentication, which is maybe that true identity on blockchain, and we'll park the car there in a second. But yes, I would say for Coastal, we are only accelerating and doubling down on this theory that someday it would be a huge compliment to us if people were to refer to us as a data management company versus a bank. And nothing wrong with being called a bank, but really that expertise that you're talking about of know thy customers, know thy partners, and add value, right, while protecting the safety and soundness and integrity of the oversight of the precious resource called data, and making sure the bad actors don't get at it and that nobody misuses data is paramount. But right there, I think smarter people in society than I have figured out that you have access to so much information that if used appropriately, you can add value. And to start with, I'll tie it back to this blockchain theory, and I'm a huge fan of blockchain. You know, again, my comments talked about crypto, not blockchain. And eventually, I would love for true identity, a blockchain-based type of identification, to be adopted by the federal government or some other entity to avoid fraud in the digital space. Fraud is rampant. Fraud is awful. We're trying to fight it. And so we think there's things the nation could do to collectively help, in fraud prevention and BSA enforcement and right, trying to do all the right things. But it boils down to data and how do you authenticate data. So, but on our side, right, one of the reasons we think data is so critical is, we would love to share a bad IP address if we find one with other banks. We would, you think about that, the OFAC list. Imagine if it expanded to bad IP addresses, right, across the world or across the nation. So if somebody's trying to open an account here and we discover it's bad IP and there's fraud involved, that they can't use that IP address, so it shuts down a vehicle versus them just going from digital bank to digital bank to digital bank with the same IP. We could make it at least a little bit more difficult. Also, if we did get to that blockchain-based true identity, I'm a big fan because if the chain is broken, right, the identity is broken. And so it allows us to figure out better ways to authenticate. Eric's opening an account or Eric is authorizing this transaction. And we have multiple sources of truth recording it. So it makes it even tougher for fraud to occur. But specifically with Coastal, I'm also real excited. Some different things we think we can do with data, not only with fraud and BSA and compliance monitoring and good old-fashioned banking stuff that data can help you be safer and more sound and secure, but also to highlight our partners. And, we've got in beta right now our own Coastal World. So if you go to www.coastalworld.com, selfish plug there, it's in beta, but we have the digital adaptation of our virtual marketplace, the metaverse. We're in it, and we're highlighting our partners, and it's gamified and it's interactive. But that exemplifies what we're trying to get at is, hey, we've got these 20 plus partners that have some of the coolest products that are adding value or the coolest demographics of communities that are traditionally unbanked. How can we have these companies help each other? And how can we help get these products and services? And so this virtual marketplace or mall is just a visual adaptation of data management, of using data to add value to others.
That's so cool. I don't mind the shameless plug because I think people should go check this out. If you want an alternative to what Mark Zuckerberg's building, maybe you take a peek at what Eric's got up his sleeve because he's got some great stuff.
And ours can plug into Mark's world. I just can't afford to plug into his world.
Not many can. Okay, so that brings us to our last point. And just, in short order, I was thinking about all the different, layoffs that we've been seeing, whether it's Chime, obviously Twitter's doing its own thing right now, but, Stripe has had some announcements that's on the heels of NYDIG and Fiserv and MX and companies that have really hired a lot of smart, talented people. they're having to shed some pretty incredible talent. So boom times are over, and I think we're going to see some lessons starting to be appreciated differently. You've long been a magnet for talent. What are some of the things you're discussing within Coastal as you watch this reduction in force play out?
I guess two different angles to answer this. First and foremost, we hire mostly bankers. So for us personally, right, we're operations, we're compliance, we're BSA, we're audit, we're recon, right? We're the bank in these relationships with these awesome companies that are usually referred to as fintechs or techs, or brands that are forward leaning into technology. So I love it when a bank merger happens. That's what I look at. Or when banks lay off people. That's when I get really excited, because we can go in and hire an audit team. Wow, I mean, that's cool stuff for us. Or BSA members. So we're actually in 32 states with our employees now, and Canada, just because we'll go where the talent is. Now, to answer your question a little bit on the other side, because we do have a lot of exposure to the technology world, and we're a big VC lender that invests in tech companies via one of our partners, Carta. I think all of these companies have had 10, 15, 20 years of boom. And even the stalwarts that are fantastic, Microsoft, Amazon, sitting on hundreds of billions of dollars of cash, are using this window to reevaluate, do they have all the right people on the bus? And a year ago, they couldn't get away with layoffs because they would have been branded or shunned or highlighted as different. Now, I think everybody is using this, right, wrong, or indifferent, as a get out of jail free card to reevaluate their employment base. And it's big, but it hasn't been done in a long time. So the cuts are going to be deep. And my heart goes to those employees, because I agree with you, Al. What you said is, man, there's going to be some good talent that is now saying, well, one, shitty timing, excuse my language, but right before Thanksgiving and Christmas, thanks, everybody. I agree. I wish there would be better, thought process to the process, but they don't want to miss the window, these companies, I'm assuming, to jump on the bandwagon. But two, they're going to find homes. Digital adoption is not going away. Evolution is not going away. And man, I'm telling you that when Microsoft in our community, or Amazon, through their ages, they've not done layoffs, but as people are shed because they either want to leave or they want to do their own deal, the innovation that comes from these smart people in a year to 18 months is going to rock our world. And I think this process, you got to get through this period. Especially, my heart goes to the individuals right now as they get the shock of getting that email in some cases, or that phone call, let's hope. They're going to be fine. And man, they are going to aggregate to the startups, and they're going to raise money next year because the venture capitalists are sitting on huge piles of cash waiting. Man, I'm really even more excited about digital adoption and evolution in 2 years than I am today because of the layoffs. You got to unlock that talent from Amazon and Microsoft so they can go be free and build.
Well, I mentioned to start, Coastal Financial isn't your ordinary bank. And as you've heard, Eric Sprink really is not your ordinary CEO. So, my friend, it was wonderful spending a little time with you. He's Eric Sprink. I'm Al Dominic. Thanks for getting plugged in with Cornerstone Advisors.
Thanks, everybody.